Gartland Law presents Taxes, the IRS, and You with your host, Bernie Gartland. Taxes, the IRS, and You is a different kind of show that'll help you solve your tax problems. As former Deputy Attorney General of the state of Delaware, and with over 25 years of experience as sole practitioner in both Delaware and California, the name Bernie Gartland has become synonymous with taxes. And now your host, Bernie Gartland.
Hey everybody, it's Bernie Gartland. Name of the program is Taxes, the IRS, and You. And we're here every week to solve all the problems you need to be solved if you have tax problems, credit problems, bankruptcy problems. And a lot of times we'll bring in guests, experts, I guess you could say, in IRAs, 401ks, setting up retirement programs. But we have a normal panel here, and it consists of David Wiesen, who is a former defense attorney for the last 20 years before joining Gartland Law, and he does all the tax problem solving. And Brian Bauer, who is the CFO and principal in a company called American Tax Centers, which is a sister organization of Gartland Law. And you'll understand why we have the synergy as soon as we go into the discussion of what we call the three-part problem-solving process. Now, let me explain right off the top. We believe that any tax problem, IRS or Franchise Tax Board, can be solved in three parts in a three-part problem-solving process. And we're going to tell you what that process is. So anyway, David, you're in the house.
Thanks for having me, Bernie.
And Brian, you're here.
Yep, I'm here.
Now, Dave, why don't you tell us a little bit about your background, how you got to get to be with Gartland Law?
Sure. I've been in the desert since 1998 and working in criminal defense. And I got a little tired of that and decided to come over and the tax problem-solving realm, and enjoying that since the beginning of 2010.
So you went from criminal defense to attacking the IRS. Is that what it was?
I think of it as collections defense.
It's
all the same stuff.
Okay. And Brian, why don't you give a little bit of background of yourself?
Well, I was in the military for 4 years, got out of the military, I went to college, and after that was a tax auditor with the state of California for 20 years. During that time, we sat across the table from each other. I audited some of your clients. Have since retired from the state, and now I head up American Tax Centers and tax problem solving, tax preparation, current taxes, back taxes, problems with the IRS.
And the interesting part about that is that the reason I approached you when we were putting together this sister organization, American Tax Centers, was the fact that I did used to sit across the table, in audits, because you were an auditor for the state for 20 years. And so what I did, I saw the value of having someone who is a tax preparation guru, knowing how not only just to do tax preparation, but also thinking like an auditor, so that when you're doing the tax returns for somebody, that you're thinking like the auditor. The other thing is that, and we have talked about this a lot of times, is that the value of having the hookup between American Tax Centers and Gartland Law is that you're not an attorney, so therefore, what can't you do?
I can't practice law.
Now, if you can't practice law, how are you going to give advice to people?
Well, see, that's the great thing about coming here is that if most people go to a regular tax preparer, CPA, EA, they may have a situation where they need to deal with the IRS. Well, those people can't practice law, so they can those people may have 5 or 6 options available to them. 3 of them could be legal options, which they can't go into. But here, I just walk over and grab you and say, hey, Bernie, they got this situation. What legal options do they have?
Because Dave and I are lawyers.
Exactly.
You see, folks, the softball I just gave him to segue into that? Okay. All right. Dave, we see 5, 10, 15 clients a week that either have not filed tax returns in several years, have filed tax returns in several years and owe money, haven't filed tax returns and the IRS says you owe money. How can that possibly be? I haven't filed tax returns, but the IRS says I owe money. Okay, and they're in a dilemma because either they're getting married and they just told their fiance, oh, by the way, I owe $500,000 or $50,000 or whatever.
Surprise.
And yeah, surprise. And here's your wedding gift. Okay. And the other thing is that they're sitting there saying, I just got my wages attached at the office or whatever. And again, what's really surprising, and we run into this a lot, and we're going to elaborate on it, is that when you don't file a tax return, the Internal Revenue Service has the right under law to file a dummy or a substitute return for you. And the state of California does the same thing, okay? It's called an MPA. So when the individuals or the couple come into the office, we say to them, after we get all the facts of the situation, we know who they are, how old they are, how many children they are, and we say, we are going to help you. We understand now the facts. We understand your income, your assets, your liabilities. We're going to invoke a three-part problem-solving process. Okay, now, Dave, what is the first part of the problem-solving process?
Well, the first part of the problem-solving process is getting the blueprint.
Okay.
And the way we get the blueprint...
Now, what is a blueprint?
A blueprint is our plan for how to solve the problem.
Okay.
And in order to do the blueprint, in order to go into step 2 and step 3, we need the blueprint. And the way we get that blueprint, there's two parts to the blueprint. Okay. One is ordering under the Freedom of Information Act information from the Franchise Tax Board and the IRS, every single thing that the IRS and Franchise Tax Board knows about those taxpayers.
Okay, so in other words, we need to know what they know about the client so that we can complete the first step and go into the second step. And what I love to do is I love to interview people who are in construction. And I say, let me explain to you about this blueprint a little bit. The blueprint is like, okay, how many houses have you built? Oh, 200. Okay, so Mary from Desert Hot Springs calls you up and says, I have a piece of land. I want you to build a house. Can you start Monday? Oh, yeah, I can. And she said, okay, great. You go ahead and start. And he says, well, give me a blueprint. She says, well, wait a minute. Why do you need a blueprint? You know how to build a house. He said, no. You don't understand something. I need a blueprint. It's the same thing with doctors. I don't feel well. He said, all right, we're going to take your blood pressure, do an MRI. Why do you do that? What's wrong with me? He says, I need this blueprint, a medical blueprint. This is what you're talking about. We need this blueprint. And what do the taxing authorities know about that client sitting there so we can do certain things? And what else do we do in that first part of the problem-solving process?
Well, in that first part, the kind of information that we want to know is we want to know what years is the IRS interested in. Okay. There's some years that might be in retention. Those are older years where the IRS has kind of looked at it and decided we're not really going to proceed in that area. We also need to know whether the return was filed by the person, whether the return was filed by the IRS.
And there's a lot of ramifications if there's substitute return in there.
Sure, and we'll discuss that in a later show. Right. We also want to know, are there tax liens? Had the people filed a bankruptcy before? Right. Has there been some sort of abatement? Was there a subsequent assessment by the IRS?
And is there also in this blueprint process, is there a way to find out what the client the IRS has on record of their earnings?
Sure, and that's something we call IRP. Mm-hmm. It's a reported information about the person. Right. Any W-2s, 1099s, 1098s, anything that any bank or creditor or employer has reported about these people.
So coupled with sending for and analyzing what we call transcripts of account to show what the IRS has done, we get the information for what the IRS has on record of your earnings, as well as let's say if you pay mortgage interest, you have a record of that. We also ask the client to work with our staff, our tax preparation staff, to get all the information for, let's say, expenses, deductions, business expenses, etc., so that we can go from the first part of the problem-solving process into the second part of the problem-solving process. And right now, ladies and gentlemen, we're going to take a self-serving crash commercial. And when we come back, we're going to tell you what that second part of the problem-solving process is. And Brian Bauer is going to elaborate on that. So stay tuned. We'll be right back.
Visit us on the web at www.gartlandlaw.com.
Hi, everybody. I'm Bernie Gartland. Let me introduce you to Kimberly and Brian from American Tax Centers.
When filing taxes, you want them done quickly and accurately.
We have over 24 years of tax preparation experience. And speaking as a former state auditor, we know accuracy.
Whether it's current year or prior year tax returns, we know that our experience will work for you.
So call us today for a free consultation and peace of mind to know that your taxes are done right.
Hey everybody, Bernie Gartland, welcome back. Name of the program is Taxes, the IRS and You. We're here every single week, and we're going to have different topics and guests that we're going to have on the program. But our resident panel is Dave Wiesen, who's a tax attorney with Gartland Law, and Brian Bauer, who's a CFO and principal in American Tax Centers. And we're talking about the three-part problem-solving process when you have a tax issue, whether it's state or federal. It is a tax issue that we think we can solve in three basic steps. Now, we talked about the first step, Dave. We talked about getting the blueprint, getting the information that the IRS knows about the individual, and including the reported income that they may have, okay? Now, the second part of the problem-solving process is to do the actual tax returns. Now, Brian, American Tax Centers does the tax returns for all the clients that we have with Gartland Law.
Right.
We did take time to explain the synergy because CPAs, enrolled agents, and tax preparers cannot give legal advice. They're not lawyers. So the way that we accomplish helping the client is by this marriage we have right here in this building with American Tax Centers and Gartland Law. Okay. So now we get this information, what we call the blueprint, the information. We give it to you. What do you do next?
Well, the importance of getting that information is a lot of these people, as you can imagine, when we're going back and doing their tax returns, they don't have everything. They've lost W-2s.
Right.
They can't remember if they got interest from a bank account.
Right.
So we take this information, and that's the starting point. We have to have at least that information on the tax return, because if we don't, it's just going to get kicked back. The IRS is going to basically say, hey, good try again. Doesn't matter what we have.
Well, the one thing the IRS does not give you is the person's expenses. So that
Exactly.
is something they have to provide,
Right.
correct?
So,
Okay.
so the starting point is I have to at least put that stuff in from the IRS,
Okay.
all their income sources. Then I marriage that with whatever the taxpayer or client does have, which would, like what you said, the IRS doesn't know about what expenses they have. So
Right.
they have to compile that information the best they can. If they're a real estate agent or they own their own business, they're going to have miles. They're going to have, cell phone expenses. They're going to have the cost of goods sold, the products that they buy to resell.
Right.
They're going to have all that. They're going to have to provide that information to us, either an accounting of it or the actual invoices, receipts, canceled checks.
Okay.
And then so I combine that with what the IRS has to prepare their tax return, because the IRS will not deal with anybody until they're in compliance. And that's the important part of the second process, is to prepare all the returns that the IRS is looking for and get them to the IRS so that they're in compliance now, and the IRS will deal with us
Right.
and deal with the client so that we can continue and try to solve their issues.
So the second part of the problem-solving process is to actually get the tax returns prepared that the IRS is looking for.
Exactly.
And you're utilizing a combination of factors. You're utilizing the information that you got from the IRS as to what the earnings are, and you're getting information on the transcript to see whether they're subject to returns or not. And you then take a look at the IRP information, the transcript information, and you've been working with your staff members, have been working with the client to get information concerning their business operation or their personal operation,
Right, all
so
their
that you can
expenses.
take, and how many children do you have, and how
Right.
and how about divorce and alimony, which is very
Right.
important because it's a front page deduction.
It's a deduction.
Okay,
Yeah.
so now we got these taxes prepared. Okay, now the interesting factor is that both of you have known that we get some people in here that have gone to other people that have made a mess out of their tax preparation because the client walks in and says, I haven't filed taxes, and they say, okay, let's just file the taxes. Then all of a sudden they get all these audit notices and everything else. Very rarely do you get anybody that gets audited by the IRS. Rarely, if not at all. And we know why. Because in 1988, I met with the district director of the Internal Revenue Service. His name was Michael Quinn. And I told Michael Quinn that I was preparing tax returns and I was getting these things called CP2000. What is a CP2000?
Well, it's a notice from the IRS saying,
Nice try.
Yeah, basically, we looked at your return,
Right.
and we have evidence of all this other
Right.
stuff, and you didn't include this, so
Right.
we think you owe this amount of money.
Right. So I kept getting these because I didn't. This was 1988 when we started doing these prior year tax returns and everything like that. And I'm sitting there going, every time I get one of these CP2000 that says nice try, nice try, nice try, I'm sitting there going, somewhere along the line, I'm in trouble with the IRS. And as an ex-prosecutor, as a deputy attorney general for the state, I didn't need this aggravation. So I met with Michael Quinn, and he told me, he says, I'm going to show you how you can send for the information so that when you file a tax return, when we look at it and we look at what you have down as income and what we have down on our records income, they match.
Right.
And that's what you base your tax preparation on, is the information the client gives you as well as the IRS, correct?
Absolutely, that's correct.
And so then what happens is that we sit down for the third part of the problem-solving process, okay? Now, the third part of the problem-solving process is a little bit more complicated. And, Dave, I want to talk to you a moment about the substitute returns, because they do interplay with the first part of the problem-solving process and the second part of the problem-solving process. And that is, let's suppose somebody has, and you mentioned, I think before, Section 6020B of the Return Revenue Code that allows that. You got a guy that comes in and then has 1099s of $200,000, but he doesn't file his tax return. So the IRS does a dummy or a substitute return. If they take the 1099s that have been reported to them, what expenses does the IRS allow off of that $200,000?
They don't have any of them.
They get nothing.
They have no idea what your expenses
As my buddy Vinny from New Jersey said, not a ting, huh? Not a ting. So what happens is they base the tax calculation on the $200,000 because the IRS says, hey, you didn't file, we don't have any record. Now, a little poetic license here, suppose the guy had $190,000 worth of deductions.
Yeah, zero.
Okay? And he wouldn't have to pay the tax on $200,000 if he did his tax returns.
Only the $10,000.
Right. So part of the problem-solving process, by the way, is like an ancillary situation where you say, we have to prepare the tax returns based on the information that Brian gets and get with the client to get that $190,000. And then we have to send it to a place called audit reconsideration. And you say, dear sir or madam, enclosed please find the original tax return. Oh, by the way, my client forgot to file his tax return, and these are all the legitimate deductions. Now, we have found out something very important about audit reconsideration. If you cannot back up your deductions, don't take it as a deduction.
Right.
Because audit reconsideration will analyze and reverse, in most cases, what they have done. Therefore, we have done a good job in not only preparing a tax return for you that needs to be done, but also reversing a substitute return that shows the client owes mega dollars when in fact he doesn't owe mega dollars. So anyway, we're coming to that point of time again. We're going to take another, I always say, the self-serving commercial because this is what we do for a living and we do it well. And what I want to do now is spend the next segment of the program and talk about the third part of the problem-solving process. So folks, we'll be right back. This is Bernie Gartland. The name of the program is Taxes, the IRS, and You.
Stay tuned. Bernie will be right back with more tax solutions.
Well, it's that time of year again. Yes, it's tax preparation season again. Hi, I'm Bernie Gartland. For years, we at Gartland Law have been preparing your prior year's unfiled tax returns. Well, we also have the ability to do your current year tax preparation. If you haven't filed tax returns for several years, or you simply want us to prepare the current year tax return, we can help. Call us today to set up your tax preparation appointment. Hi everybody, I'm Bernie Gartland. Let me introduce you to Kimberly and Brian from American Tax Centers.
When filing taxes, you want them done quickly and accurately.
We have over 24 years of tax preparation experience. And speaking as a former state auditor, we know accuracy.
Whether it's current year or prior year tax returns, we know that our experience will work for you.
So call us today for a free consultation and peace of mind to know that your taxes are done right.
Hey everybody, Bernie Gartland. The name of the program is Taxes, the IRS, and You, and welcome back. In-house we have our resident panel, Brian Bauer from American Tax Centers and David Wiesen from Gartland Law. We're discussing people who have tax problems. And there are a lot of people out there that are one-dimensional. They only say, oh, do an offer and compromise, do an offer and compromise, oh, do an offer and compromise, okay? Well, we say there's a three-part problem-solving process to solve all these different problems, and we've covered two of them. The first thing is that we send for and analyze all the information that the IRS and Franchise Tax Board has on the individual so that we know what we need to do for the second and third process. The other thing is, Dave, you brought up a good point before, is that when we get back this information under the Freedom of Information Act, sometimes we have to do what?
Sometimes we have to order more information.
Right, because there's certain code numbers and different other things that are going on that says, wait a minute, I see something. And a perfect example is the IRS has a certain code number on these transcripts that to say there's a criminal investigation going on. And a couple of times I picked that up. And so you sit there and you pull a client in and say, I think you really need to talk to me.
Yeah.
Okay. So we send for, analyze the information, and come up with a plan for tax preparation. And we also, like, for instance, if we find out that there was a year that the client didn't even know about, that there was a substitute return, we want to send for the actual audit file that the IRS has on that individual. Okay. So now, Brian, you do all the tax returns. You got them all done, and your staff member, Kimberly,
Right.
God bless her.
Right-hand man there.
Right-hand person. She
Yep.
gives me one sheet that has down everything that's owed or refunds or whatever. And by the way, it's interesting, the refunds, if you're preparing a tax return for a year that's more than 3 years old,
They don't get it.
not only they don't get the refund, but they can't use as a set-off. I mean,
right.
This is why people should do tax preparation, and that's a topic for another time, okay? Right now, we know that the client owes this amount of money, okay? We know that. Now, what are the different options a person has? First option is don't do anything. In fact, what I tell the clients, and by the way, don't take me literally on some of this stuff.
Yeah, don't actually do this.
I mean, the options are really clear, but sometimes I have a little license with the clients, I say, because it's so serious, you have to have some levity somewhere along the line. But I say, in fact, don't do anything. I want you to call the IRS and just say, I came from Bernie Gartland's office, and he told me to tell you guys to go to blazes. Okay, well, guess what happens? They destroy you as a client, and there's two people at my front door with pinstripe suits on and eyeglasses, and they got guns right here.
The men in black.
Yeah, and the men in black, right. So the first option, not a good one. In fact, none of the options are any good, but you have to listen to the option and say, I don't like any of these options, but the best one for me under the circumstance seems to be. Second option. Find the money. Beg, borrow, steal. I don't care where you get it from. I know you had some problem with me selling to steal.
Well, yeah,
Don't
a
break the
lawyer
law.
telling people to steal doesn't
I
sound
know,
right.
a lawyer telling somebody to steal, right. All right. Beg, borrow, steal. Find the money and pay it off. And by the way, pay California off first.
Right.
They're more difficult to deal with than the IRS. Third option. If you can't do nothing and you can't find the money, there's something called an IA. What is an IA, Dave?
That's an installment agreement where you're going to pay the money over time.
Over time. And you submit financials and you work on an agreement with the IRS of what can be paid, and they determine what your national standard deductions are, even though it's not maybe reality, right? Now the next option is, I know this is going to drive people crazy, disappear for 10 years.
Yeah, 6502.
6502 of the Internal Revenue Code. Most people do not know that. They always say death and taxes, death and taxes. The interesting thing is that there is an Internal Revenue Code, section 6502, that says there's a 10-year statute of limitations on collections once it's been assessed. And a lot of times the reason we send for and analyze the information is sometimes those years are coming to an end. And if it's a substitute return, even it doesn't say tax return being filed, it says from date of assessment. So the statute may run and you don't owe those taxes for those particular years. So do nothing, find the money, installment agreement, disappear. How about an offer and compromise? An offer and compromise, which all these sales organizations, which will get you in a lot of trouble, but what an offer and compromise is doubt as to collectability. Hey IRS, I owe you this amount of money, how about taking this amount of money and let's call it even. It takes about 9 months to a year to get done. It's very convoluted. Sometimes we're successful, sometimes we're not. We have a success rate around 98% because, Dave, we don't.
Sure. Yeah. If you owe $50,000 and you have $100,000 of equity in your house, you're probably not going to qualify for an offer in compromise.
Yeah, we ran into that, by the way, as a side issue, folks. We ran into that. One of these national organizations got the guy to give him a lot of money to do an offer in compromise on $9,000. What was the amount of equity that he had?
I think he had like almost $300,000.
$384,000 of equity. Okay?
Yeah. No way that was going to go
Fortunately, the Attorney General of the state of Texas is looking into these matters. Okay? The next option is file a Chapter 7 bankruptcy. Wait a minute. Dave.
Are taxes dischargeable in bankruptcy?
You're telling me that you can file a Chapter 7 on taxes? The answer is yes. And by the way, that is something we're going to cover in another discussion. So we got do nothing, find the money, installment agreement, disappear, do a Chapter 7, do a Chapter 13 reorganization where if they don't meet the qualifications for dischargeability, which I said we're going to cover this in another time. Then you have to go into a Chapter 13 to stop the penalties and interest and have a 5-year plan. Okay? Now, your baby.
Currently not collectible?
6343. What is Internal Revenue Code 6343, Dave?
6343 means it's another code section of the Internal Revenue Code. If you don't have enough money to handle your expenses, if your income doesn't handle your expenses, then the IRS cannot levy you. And that means they can't go after your bank accounts, they can't go after your wages, they can't go after your house.
Right. And it's an interesting tool because if we know that there is an ability to put somebody into a bankruptcy, you can put somebody into an uncollectible category and wait out the time before so that they qualify for a tax bankruptcy. Or if the statute of limitations is running under 6502, the statute of limitations on collections is 10 years. By putting somebody into a uncollectible category under 6343, and the interesting thing is, Dave, it's not a policy. It's law. It's by statute to do this. So what do we have? We have send for analyzing information, get the tax returns done, and then invoke one of these options.
And sometimes a couple of the options.
And you're right, a couple of options. So, folks, here we are. We're at the end of our session now. Taxes, the IRS, and you. We'll be here every week. We're saying goodbye to Dave and say goodbye to Brian. Thank you very much for participating, and I think we helped the folks out a lot today.